What is fixed cost? Fixed costs are expenses that remain constant regardless of changes in the quantity of goods or services produced by a business. These expenses are necessary and must be paid within specified intervals, typically remaining steady for a predetermined period as agreed in contracts. The amount of fixed costs varies depending on the business's scale and industry. For instance, manufacturing companies incur high fixed costs due to the need for operational space and equipment. In financial analysis, total costs for any business can be divided into fixed costs and variable costs. The ratio between these two depends on the nature of the business, with fixed costs often locked by agreements over specific time periods. In contrast, variable costs are directly proportional to the volume of goods and services a company produces. Fixed costs play a vital role in financial analysis, particularly when determining the cost per unit and understanding a company's cost structure. Fixed costs are considered indirect production costs since they are not incurred directly through the production process. Financial ratios, break-even analysis, and operating leverage are commonly used tools to evaluate fixed costs. For example, the fixed cost ratio reveals the proportion of fixed costs in production, while the fixed charge coverage ratio assesses a company's ability to meet its fixed obligations. To calculate fixed costs, the formula is fixed costs equals total production costs, variable cost per unit times number of units produced. For instance, if a food truck has a total monthly production cost of £6,000, sells 800 units, and each unit has a variable cost of £4, the fixed cost can be calculated by subtracting variable costs from the total production costs. The distinction between fixed and variable costs is key. Variable costs fluctuate with production volume, increasing or decreasing as output changes. If production stops, variable costs are zero. Fixed costs, however, are incurred regardless of production levels. Even if output is zero, fixed costs remain unchanged. Average fixed cost, calculated by dividing total fixed costs by the number of units produced, represents the fixed cost per unit of output. Examples of fixed costs include: 1. Property rent. Rent is generally fixed for the duration of a contract, such as a year. 2. Payroll. Employee salaries are consistent over set periods. 3. Insurance interest on loans. These costs, like health or property insurance, and loan interest remain stable unless adjusted by additional loans or changes in policy. 4. Licenses and property taxes. Fees for licenses and property taxes for buildings, equipment, and vehicles are generally fixed. 5. Manufacturing equipment. Payments for essential equipment and machinery remain consistent each month. Fixed costs are foundational to understanding a business's financial structure, especially when calculating production costs, analyzing break-even points, and making strategic pricing decisions.